Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by economist Stephen Koukoulas. You'll find him at thekook.com and on Twitter using the handle thekook. Stephen, a week ago, you were almost non-understandable, I've got to say, after the Magpies one. Have you recovered? We're a week through now.
Only just recovering. A little over a week ago, it's scintillating. It was probably not quite as good as your wonderful holiday, but it was mighty fun. And it was something that I'm going to savour for many months to come, because it might be another decade before they win their next one. So,
yeah, whatever happened to collywobbles? I grew up knowing about collywobbles.
They may have grown out of it. I suspect they're having a more sane coach and learning from your mistakes. It's one thing that, all people should do. And maybe the Collingwood football team has learnt from the fact that, finals do matter. Just because you're good during the home and away season doesn't guarantee you a spot in the grand final. So, no,
yes,
all close semi-final games, but they made it.
Fantastic. Well, congratulations to the team and to you, Stephen, who is a diehard supporter for many years. Talking about things that made it, Michelle Bullock, she made it to the top job at the Reserve Bank. And, of course, last week was the first time she oversaw a board meeting. They came out, not a lot of change to what Phil Lowe probably would have said.
Indeed, if you look at the statement that Ms. Bullock put out and compared it to Dr. Lowe's last statement a month earlier, there were a few word changes, obviously reflecting some of the updated economic news that occurred. But basically, it was exactly the same nuance, the same assessments on inflation, slowly but surely falling, growth weakening, the unemployment rate probably ticking up, house prices probably edging up a little. So that combination of factors that were important to the RBA a month ago are still there. And in a sense, that's as it should be. Because to be fair, a few little bits and bobs had changed about the economy and financial markets, but there was nothing that would have caused any central banker, Phil Lowe or Michelle Bullock, to really materially change their views. So it was a rates on hold decision, and the reasons for the fourth straight month of rates being on hold were much the same as the previous one.
Okay, so where are we up to in the economy, in the Australian economy first? People say, how's the economy going? I kind of say not bad. I think that's probably a pretty good assessment, but what's your take on it?
Yeah, not bad is a good one, because we are slowing down, and we've got to put into context too where we were and where we want to be. So the economy had to slow down. It was growing too strongly. Inflation was too high in 2022, and the tightening of monetary policy, and dare I say even the sort of tightening in fiscal policy, the budget surplus that they delivered was pretty good news. So you throw all that into the melting pot of assessment of where the economy's at. And yeah, it's slowing down. For some people, there's a bit of financial pain from cost of living pressures and the interest rate hikes that have been delivered. But unemployment is still below 4%. Inflation is still decelerating slowly but surely. And, the economy is just muddling along. And, the interesting question will be, how we finish off this year and how we kick off the first half of 2024. Are we going to keep cascading towards a hard landing or recession, if you like, or are we just going to have that narrow path that former Governor Dr. Lowe was talking about when he was in charge and he was setting interest rates?
So I want to look at the week ahead shortly, but before we do that, we just should mention the US and particularly US bond yields and what that means for the Australian bond market. Quite a crazy week last week.
It was extraordinary. We saw that incredible sell-off in yields through the course of the first half or through the latter part of last week, and yields hit 15, 16, 17-year highs on various parts of the yield curve. And at one stage, the 30-year yield in the US hit 5%, which is extraordinary compared with where we were 2 years ago when those yields were near 1%. And it ricocheted around the world. Everyone had the bond market sell off. And here in Australia, we had our yields spiking, rate cuts that were being priced in as recently as a month ago were priced out. We had the 10-year government bond approaching 4.6%. It came off a little after that. But basically, it's this market repricing some of the inflation risks, feeding into what I think was the oil price, which got to around about $95 a barrel. Obviously, it was extremely volatile and tended to trend a little lower late in the week. But it's this assessment that is inflation going to be higher for longer? Will it take a little bit longer to get lower towards the target bands? And if that is the case, then central banks will keep monetary policy tighter for a little bit longer than the markets were thinking as recently as a few weeks ago.
Okay, so let's get on to this week. Not a lot of data around, but we have the National Australia Bank Business Survey. We also have the Melbourne Institute Consumer Sentiment Survey.
Yes, the survey on how businesses and how we consumers are feeling. They're not really top tier bits of economic news, but they are still important in their own right. Going to the consumer sentiment numbers first, we know that we consumers have been feeling pretty miserable the last 6 months or so. Consumer sentiment's very weak. And as we were just touching on before, the interest rate hikes, cost of living pressures, and now petrol, $2.20 or so a litre, is going to dampen that sentiment, I suppose, towards consumers. And we're still going to feel probably pretty subdued or pretty pessimistic. The interesting thing about all this is the business sector is pretty optimistic. The NAB survey is showing that business conditions, business confidence have been pretty resilient. Yes, they've come off a little bit as the economy slowed down, but they're still pretty elevated compared with history and certainly relative to consumers. And we also know that that's feeding into the CapEx numbers, which we saw, what was that, a few weeks ago now, showing that businesses are still investing, investment in machinery and equipment and even structures, buildings and structures, warehouses and hotels and these sorts of things is actually pretty strong. So we'll be watching those with a great deal of interest, but I'd be very surprised if consumers were still not feeling pretty miserable and businesses were feeling, relatively upbeat.
And definitely worth a mention is the US inflation figures this week. We were talking about bond yields. Inflation's a big part of that.
Oh, a huge part of it. It's probably going to be spiking up again. The oil price, the petrol price, gas price, I think they call it in the US, it has gone up, and these numbers will incorporate that. So we'll see that high inflation rate being printed in the US. The question will be, well, what's it excluding volatile items, so excluding food and energy? Hopefully we only see a 0.2% month-on-month increase, which will be consistent with lower inflation. But the headline figure will get a bit of a boost from simply the oil price going up.
Chinese inflation figures are out as well. How much do we care about them?
Yes. I've got to sort of sum this up in 30 or 40 seconds. They do matter because China is still a low-cost manufacturer for the world. And if China's got lower domestic inflation, which it currently does have, it can still export those goods around the world and help get global inflation lower. We're expecting the Chinese inflation numbers to show that year-on-year inflation's about zero. It's sort of been very on its own compared to other economies in having very low inflation. Its economy is very weak. It's going through a whole lot of troubles there. And it's suggesting, too, that if inflation is very low, then clearly domestic demand within the Chinese economy is weak. And that's probably not such a great thing either, because we'd like a strong Chinese economy, particularly here in Australia.
Stephen, enjoy your week.
Thank you, Sean. All the best to you.
That was economist Stephen Koukoulas, better known as The Kouk, Thekouk. You can find him at thekouk.com and follow him on Twitter, or X nowadays, using the handle The Kouk. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.